Hi traders, welcome back to the Desire to Trade channel. So we're kicking off 2025 with a pretty big bang. And when I say bang, I mean volatility, at least, in the US markets, which, often and has done permeates into all the other markets, including, equities, FX for sure, all the way into Asia. And I'm getting a lot of feedback and I'm kind of getting concerned. Why? It's that damn FOMO. So again, welcome back to the channel, a jet-lagged edition. It's about 3:30 a.m. here in New York. I just got back from a about 3-week trip to Europe. I stopped in London for 5 days, purely tourism, and then to my I consider my second home in Shanghai, China. A great time. A little bit of a long journey. Time difference certainly plays a role. And of course, as a traveling trader, I put some trades on in this volatile market. If you'd like to see some of those, let me know. I can do them in a future video. Some of my trading videos don't do as well as sort of my coaching videos. But if you say you want to see them, put them in the comments, and I will definitely show them to you. All right. And I have many more trips in the future planned, including next week. So let me know. I can do that for you. But today, I want to talk about something a little concerning, not even from a coach's perspective, but just from a trader's perspective, is and a risk manager perspective, most importantly, is I'm getting a lot of feedback on this volatility that we're seeing lately in the global markets, particularly stemmed from the U.S. Craziness going on so far this month in January and now into February. So what do you do about it? I'm getting a lot of like FOMO kind of things that are writing up, and that's very concerning, again, from risk management, but also from a coaching perspective. So what can we do about it? What do we do about this FOMO, this fear of missing out? I see it a lot, and it sort of escalates. It seems to escalate on a membership scale and also in the YouTube community when there's more volatility. So what can we do about it? Let's kind of tackle this now, because that's a pretty big, prominent, risk of ruin. We don't want to have any traders, blow their accounts and stuff like that, especially in the new year. So let's go through some ideas of what we can do to help you with this FOMO. I have it sometimes too. I'm human and I love to trade. I'm a junkie. So that's usually the perfect combination of fear of missing out and trying to take advantage of some big moves. But let's go through these 5 steps to make sure we never have to deal with it again, or at least we can manage it appropriately. All right, let's go. Step 1. And where do we start? Risk identification, right? So what I want you to do is go into your journal. You're keeping a journal, right? Identify, where does the FOMO appear the most? Right? Does it appear after a losing day, or is it during one of those big news events and you see the markets flying and you want to catch on? So first thing we want to do is, and it's different for different traders, we want to identify where it's happening and what is triggering the actual sort of fear of missing out type trades. That's really, really important, because what I've seen is even in dull markets, people sort of have fear of missing out in boredom trades. That's sort of my jam. But when news events are happening, it's sort of like that sort of euphoria on the screens. And so what you want to do is identify, and there's a different path for each of them. All right, next, we want to redefine what exactly a trader does. All right, we're going to change the job description, or at least redefine it if you haven't done so already. What traders do is take advantage of edge. They take advantage of opportunity that's described in their actual trading plan. So we are sort of executors of a plan. All right, sort of project management like approach. All right. Well, in FOMO type trades, do those types of trades meet your trading plan and execution plan? Chances are they don't. All right. So what we want to do is take our sort of eyes off the lights of the screen, and we want to look at our trading plan and say, does this qualify for a valid trade within my plan? Now, some trading plans may have you taking advantage of certain news event opportunities or when things go crazy. That's fine. They should be predefined, right? Defined in your plan, and have a positive edge. So this is where usually the FOMO goes sort of awry. FOMO trades in general aren't bad if they have a positive edge, a positive expectancy, and you have the data to back that up. But when they don't, that becomes the problem. So what we're going to do first is redefine what a trader actually does. And it's not just pushing buttons when big green and red candles appear. Okay, so let's do a deep dive one step further into this sort of redefinition of a trader. And I'll put them up right on the screen here. We'll just go rapid fire into the bullets. What would have been the results of the trades that you chased? So what we want to do is sort of let your P&L drive your decisions, particularly, in the FOMO case, there's probably going to be L, losses. So let that drive your decisions. Say, hey, when I chase and when I have this FOMO, my results aren't working, right? They're killing me. So what I want to do is let the results actually, play a role in helping you say, look, this clearly isn't working for me. All right, next, in drawdown, and you want to do is look at your journal and identify where your drawdowns occur. Is your FOMO increasing? We find that a lot too because you want to get that money back, and here's these big bars coming across your screen, and you want to sort of take advantage and sort of get back to even quicker. So we want to identify that. Is this happening more in drawdown? All right, very, very important. So next, ask yourself this quick question. Is this trade compliant? So what you want to do is populate this trade into your journal, the core parts of it, the date, the time, this, maybe you have different strategies, the strategy code or whatever it is, and maybe some, emotional stuff, whatever you do in your journal, except for obviously entry price, all right, and the sort of data that comes after the trade. All right, we don't have that yet, but by putting it in your journal, you're sort of committing to a compliant trade. And that's the whole idea of FOMO trades. They're non-compliant. So you start putting them in there and you realize, this is clearly it's a FOMO trade. There's a tendency not to take those trades or sort of, get it out of your journal before you do it. So sort of like that control trigger that really helps a lot. So it's really a risk avoidance type technique that we're using here to just avoid taking the FOMO trade to begin with. All right, I find this helpful. Let me know in the comments. Maybe you do, maybe you don't. I have a no market order rule in my plan. When we do FOMO trades, they tend to be market orders. You're just like pushing the button, just get me in, get me in, get me in, right? If you have a no market order trade, you're only allowed to place limit orders. It may limit you in some regards, so to speak, but in a FOMO environment, it's really the best thing because it's just literally as you push the button, you're pushing market orders. You're violating your trading plan. So, and that will go as a non-compliant trade, and hopefully you have the rules and penalties associated with that. So think about having a no market order rule in your trading plan where you're only allowed to place limit orders. All right, think about that. All right, next, commit to trading plan compliance as if your life depended on it. This isn't just a trade where you just, oh my God, it's running, I got to push the button. No, think about when I push this button, I'm literally trying to kill my career, trying to kill my goals and dreams for my family. I'm trying to kill my why. All right. Remember those things. It's not just about chasing green bars. All right. You're making a serious violation here, or at least we want to make it like that. All right. Chances are it's not going to kill you, but you know what? Death by 1,000 cuts will. So make the commitment to say, look, I can't do this. And if I stop doing this, I'm going to be taking a huge leap forward as a trader and be able to hit my goals and dreams. All right. So sort of put some weighted pressure on the seriousness of what you're about to do. All right, so we talked about plan compliance. I preached a little bit there too. All right, bear with me. But what I want to talk about here is also make a commitment to entry plan compliance. Because really, FOMO is what it is. It's a violation of your entry rules. All right, you're just chasing. It's just market order. I don't care. Just get me in. All right, I don't want to miss out. But really, what it is you're committing an entry violation rule. So what we want to do is have in your trading plan certain entry rules that sort of limit or prohibit really FOMO type trades. Let me give you a couple examples, ones that work really well. One I mentioned earlier about sort of pre-populating your journal, gives you that little control break. But the other one is have entry rules which require pullbacks. Right? A lot of my trades have that one because I'm just looking for a better price. And if it goes without me, I'm okay with that too. Right? But if you have where price comes back to a certain level, like for a lot of my strategies, I have a moving average. So if it runs up, it goes back to a 9 period or a 30 period or even a Fibonacci, like a 50% halfback. That will force you to be patient and allow you to enter at those times. So when the FOMO is happening or when the markets are racing, you could put your order right at the pullback area. Right? I use moving averages. So one of the few times I use moving averages. I love the Fib ratios, the 50 and the 618. Let it come. Let price come to me. I want that sale at the store. All right. Let the newbies chase this too. Right. You're a professional trader. You're part of our growing 150,000 subscribers. All right. And you're obviously taking trading seriously. Kind of come to the other side here, right? And wait for those pullbacks, and you'll be glad you did, and you'll be compliant, and you'll never have to worry about FOMO again. When you add this sort of criteria of the early stages of a move, maybe it's just like three waves down, and now you see this pop that may be starting that first wave bounce. All right. This is areas where I'm kind of interested in FOMO. All right. I'll be looking to it. Obviously, I'm going to do it very selectively. I'm going to do it with strategies that I know have proven outcome and proven edge. All right. At least historically. And it allows me to participate at a smaller size. So that's something, one of those few areas where I'll give a little cheese to the mouse. All right, and one last hack. All right, something that changed my career, and really, when I look back at my 20 plus years of doing this, I looked at the first say 3 or 4, and then the rest. Or what was the big change? And a lot of people ask me, what was that light bulb moment? Very clear. I stopped adding to losing positions. So if you want a FOMO and you want to put a little bit on there and you want to measure that and say, oh, I'm a good discretionary trader, I got it, and the results can show that, that's fine. Stop adding to losing positions. And at least if it doesn't work out, it's not going to affect your risk of ruin. At least that's the intent of it too. So stop adding for losing positions, especially in a FOMO, because what happens is, FOMO is you're getting in late to the party and immediately you're in the red. So what do you start doing? Right? Start adding to losing positions. And really what that is an incredible reversion to the mean trade. And while the newbie or sort of retail trader is, looking to get in because of FOMO, we're already sort of locked and loaded, ready to take advantage of that reversion to the mean, so to speak, that will get you, sort of into a winning trade and really take advantage of the newbie panic. All right. And for those who are interested in learning a little bit more about some of the techniques that we use, in our member community, click on the link below, desirettotrade.com. Get to know a little more about what we do as a company and what we do as a coaching service. It doesn't hurt, it doesn't cost you anything. Just check us out, and maybe there's a place for you in our community in our future. All right. Thanks again. I hope you got something out of this. Be careful. FOMO is a very dangerous thing. I always have to keep myself in check as well. I'm human too. Keep size small, and we'll see you next time.